So yesterday, some people were left behind. So I'll briefly talk about the fib. Then from the fib now, I talk something small about the fair value gaps. So about the fib, we say the first step is to identify the support and resistance. And for us to identify that support and resistance, to identify the support and resistance, we look at the highest point where there was a rejection on the upper side, and we say this forms the resistance, and rejection on the lower side, it forms the support. So for you to draw the support and resistance correctly, and I repeat because I'm getting some funny drawings for the guys who are sending me the assignments. So to identify the support and resistance correctly, we look at the highest point and the lowest point. So the highest point where there was rejection, this is the candle, this is the tallest one. So let me mute this indicator just a minute. So if this is, look at the highest point, this is the highest point, yes. It doesn't matter the color of the candle. So this is the highest point. We draw the entire wick like that going forward. Okay, you draw the entire wick going forward. So that area becomes our resistance. That becomes our resistance. And this other side here becomes our what? The lowest point here becomes our support. This lowest point here, it becomes our support. So once you identify the support and resistance like that, for you to draw the fib, let me use 30 minutes. For you to draw the fib correctly, you start from, this is the fib that you use, the trade-based fib extension. Click from the support all the way to that resistance, like that. Then you drag. Okay, are we together? Yeah, if it's a downtrend, like this one, you can see it's a downtrend. You click from the resistance to support, then back like that. That's how you draw it. Okay, so to identify our entries, this will be your buy entry. If the market is within the resistance, this will be your buy sell entry. Yeah, sell entry. This is your TP1. This is your TP2, TP3, TP4, and this is your TP5 at that level. So if you are looking for a buy entry, do the opposite. Trend-based extension from support all the way to resistance, like that. Then this should be your buy entry. If the market comes and taps this support here, and after that, this is going to be TP1, TP2, TP3, TP4, TP5, like that. So that's how you can identify, that's how you draw the fib. Are we together? What's the issue? Why are you not sure, Kezia? We just draw the opposite. Draw from resistance to support. Draw from resistance to support. So if you drew from support to resistance, now you do the opposite. If you drew from support to resistance, if the market is bullish, you draw from support to resistance. When the market is bearish, you draw from resistance to support, like this, from resistance to support, then you drag like that. Kezia, together. You're not sure. You can see the difference, Aje. This is this is support when the market is bullish. This from support to resistance, bullish. When the market is bearish on a downtrend, you draw from resistance, the opposite, going down to support, like that. Sawa sawa. So uh, that's about now the support and the resistance, and that's about the fib. Now let's talk about now today's class. We're talking about the fair value gaps. What are fair value gaps? Fair value gaps, these are imbalances in the market. When the market creates an imbalance, that's part of fair value gaps. We term them as some of the imbalances in the market. So a fair value gap is formed when three consecutive candles uh, do not join, they are not joined to each other. So for instance, if this is my sell candles, this is my bearish candles, second candle, and this is the third one. So an instance where these candles do not join, they create a fair value gap. Joining means those are wicks. What I mean by not joining, this is what I mean. These candles are not interlocking each other. For instance, look at this candle, this wick, and this wick. There must be a candle in between. So you can see this candle and this one, they are not locking they are not locked to each other. Locking means the let me, how will I explain this? This candle should be locked to this one. There should not be a gap in between. Okay? There should not be any gap in between them. You can see when I mean there is no gap, at this side, you can see there's a gap between them. There must be two candles, this candle and this candle. There must be one candle in between. So if this candle is not touching this one, that is what we call a fair value gap. Because these candles must lock like this. You can see this wick, this body or wick is already has already crossed, is already interconnected to this one. So there is no gap. But in a scenario where this wick and this wick here, okay, they are not connected, you can see there is a very big gap between them. That is what we call a fair value gap. You see if people write something like this, FVG. Are we together? That was a bearish one. Now let's look at the bullish fair value gaps before we talk about the why we are identifying the fair value gaps. This is the first candle, second candle, and this is the third candle. Okay, so what happens if this candle is not interlocked with this one? What do we call that? This candle, forget about this space. This candle here and this one, They are not interlocked. So in between them, there's what we call the fair value gap. Sijui kama tuko pamoja. But if this candle comes and locks with this one, kama zina crossiana like that, zinapitana, there is no fair value gap in between. Okay, there's no fair value gap. But if this candle and this third one, forget about the second one, there's a gap between them. That is what we call a fair value gap. Are we together? So at this level, we are trying to master entries, when to enter for a buy, when to enter for a sell. So when you're looking at when we are looking at these fair value gaps, we want to look at what do they do, what impact do we get when we get a fair value gap? When a fair value gap is formed, what impact do we get? That's what I want us to look at. So most of the time, the fair value gaps do reverse the market. If this was a bullish market, and the market created this kind of a fair value gap. What will happen as a trader? If this market decides to come all the way down, we expect the market to be reversed at this level, like that. Okay, so if this market decides to drop at this fair value gap, most of the time it reverses the market. Most of the time, not all the time. Most of the time it reverses the market. So if this market decides to buy, then all of a sudden it decides to drop, you can wait for the market at this fair value gap here. So at this level, you can prepare yourself to click a buy. So you buy because you know this market will be rejected back. They'll be rejected. The rejection, the market will be reversed at that level. Okay? I don't know if you are together. So if this market decides to buy and go all the way, I repeat, if this market decides to go buy, then all of a sudden the market decides to pull down, you wait at the fair value gap. When the market creates, if the market created a fair value gap, you wait at this level. And this can be your buy entry. And you most of the time you see the market coming, creating support there, and buy. Remember our support and resistance. So we'll see the market most of the time creating support at this level. Okay. Now that was for a bullish market. Let's see for a bearish market what we expect to see. If this is a bearish market, what will happen if this market decides to sell, continue selling? If this market decides to sell, then all of a sudden it comes to this fair value gap. It left a fair value gap when it was selling. What will happen? We might expect the market might get rejected at this area. So at this area, you might expect the market to reverse. So before it reverses, it will create a resistance. And that resistance, we said we sell at the resistance. You see that big drop, and this market will be targeting this support where the market reversed. Okay, so you can sell at this area. When you see the market coming all the way to your fair value gap, you can press a sell, because most of the time the market will respect the fair value gap, and you see the market dropping all the way. So you can sell at this area. That is your selling point. If you want to buy, you can wait for the market to come tap this fair value gap. You can buy at this area because you're very sure the market will create support. Then you go all the way. I don't know if you are together. Tumeelewa Kezia? Bet. Are we together? Now let me show you examples. Let me show you examples of what I mean. So let's see what I mean by um, the fair value gaps. Let's see an example. A big example is this one here. So it doesn't matter the color of that candle. It doesn't matter if the candle is red or the candle is green. For instance, you can see this candle here, this red one, and this green one, they did not interlock. This one here and this one here. So what happened? They created a fair value gap from here all the way here. So this entire zone is a fair value gap. So what happened? What happened when the market came and tapped the fair value gap? You can see when the market came all the way, this is the candle which created the fair value gap. So when the next candle formed and came and tapped this fair value gap here, you can see there was a big drop all the way to that level. Again, when the market came up again at this level, tapped the fair value gap, just anywhere within the fair value gap, there was another drop. So all those are buy entry, all those are sell entries. These now for a bullish market. So anytime the market comes and taps this fair value gap, there's usually this drop, another drop again. Then this time it decided to break and close that gap. Okay, because what we expect if the market does not respect that fair value gap, you see the market come in and close this gap like that. So some people say it mitigates the fair value gap, but in simple terms, just say the market has closed that gap. So it will have already gotten rid of that imbalance. I don't know if you are together. So not all the time the market will respect the fair value gap, but most of the times when the market taps this fair value gap, you'll always see an impact. So this can be if you are a sniper, if you are good, very keen in your entries, this can be a very nice entry for a sell. You sell very quickly because you'll expect the market to reverse a bit before it decides to come and close this gap. Because at the end of the day, the market must get rid of this gap. Okay, so most of the time the market rejects within the fair value gap. We get so many rejections at the fair value gap. So you can see this market was rejected there 1, 2, 3, 4. Then the fifth time the market came and broke that fair value gap. Let's look at another example. Let me use a higher time frame like the way. Let me just use fair value gaps can be found in any time frame. Does it have to be 4 hours or 5 minutes or 30 minutes? Another fair value gap which was reversing the market before it was corrected. You can see this area like that. So how would we identify? Let me make it bigger for you guys. Let me identify this. You can see this candle and this candle. Okay, this candle and this candle, they are not connected to each other. So what happens? These candle, two candles created a gap in between. Okay, so when you draw like that, the fair value gap like that, you see there was a rejection. This market came to this fair value gap, then it got rejected all the way to that level. Then this candle decided to break that and do what? Close that imbalance. Are we together, Ellen? So if you're a scalper, you can be looking for all these fair value gap opportunities. Let's say where there is no fair value gap. There was another fair value gap here, though it was the market did not recognize it. It was broken. There was a fair value gap here. Let's see another example. You can see these two candles, this one and this one. You can see the wicks are already interlocking. So this one and this one, there's no fair value gap. Another one, this one and this one. Is there a fair value gap? This one and this one. There's a fair value gap in between. Okay, let's see another one. Let's see the fair value gap which has caused a lot of rejection. You can see this one and this one. There's a fair value gap which rejected that cell. You can see at that level you draw going forward. So I want you to look at how this fair value gap has been messing up with the market. So you can see the market, this candle created the fair value gap and this third one. So what happened when the market came, dropped at this level, there was a big what rejection. Okay, so it created support at this level, then the market rejected. Came back again at this level, tapped again, there was another rejection. Came back again, tapped, there was another rejection. Again, there was another rejection. So this space here is the one which has caused all these rejections. So fair value gaps play a very key role in this market. Let's see another final example. There's a fair value gap which was left here. So let me draw it well. There's this fair value gap here. All the way. You can see. Though this fair value gap was closed by this big candle here. But at the end of it, you can see there was the market created support at that region. Let's see another one. Now this one did not play any impact. This level, there's no fair value gap. There's no fair value gap here because this candle and this candle, they are almost interlocking. I think no, there's a very small one. Very small one. Now let's look at another big fair value gap. Look at this one here. Look at this one and this one. It was first rejected, then the second one, it was covered. Okay, let's see another one. There's another fair value gap here. The market did not come back to close this gap. It came all the way at this level. That's when it came to close that gap. There was another one here. This is one weakness for gold, for guys who trade gold. It always flies like that, leaving all those fair value gaps, imbalances. Then later it comes to sweep all those, to correct all those fair value gaps later. Because you can see when all these fair value gaps were left, what happened? What happened when all those gaps were left? The market came all the way. There was another one here also. Came all the way and corrected all those gaps, imbalances. And you can see that. I don't know if you are together. So you can use your entries, your fair value gaps to be your entries. For the guys who love shortcuts, no, I will not talk about shortcuts. I'll talk about shortcuts in the evening. I don't want to introduce you to indicators now before you know how to identify the fair value gap. So I need you guys to identify the fair value gaps and send me a screenshot. Identify the fair value gaps, then you can send me a screenshot. where you can see there was rejection, where there is you can see there was reversal. You can identify that. I don't know if you are together. You can identify as low as even 1 minute. Fair value gaps play a very big role, but not all the time you will get rejection at a fair value gap. Not all the time. I'm saying some instances, and most instances you must see an impact where there is a fair value gap. Look at this one. There was a fair value gap at this level, okay, and this is 1 minute. How many times has this market been rejected when it hits the fair value gap? Okay, then this one came and corrected that imbalance, then it went all the way. So this fair value gap here caused these several rejections at this level. Tuko pamoja. There's a video about fair value gaps on my channel. I'll share. Make sure I'll also have already managed to record. I hope the video is saved. I'll also share the link where I'll be talking about just a repetition of the same. There's a video on my YouTube channel about fair value gaps. Then this one I've also recorded. You see the video, or you'll find the video there. Tuko pamoja. So we look at so many factors when we are looking for an entry. We look at so many factors. You can look for fair value gaps. You can look for the trade lines where we you remember when we were drawing the support and resistance. You can look at support and resistance when you want to enter. You can look at consolidation. You can look at the fib and look at the level. All these are we do all this so that we can have so many options. We don't just rely on one bullet. All those are different, all those are bullets that we can use. These are different approaches. These are different strategies we can use when we are approaching this market. Okay, so you can, during your analysis, you can look at consolidation. We talked about consolidation. You can look at support, if the market is within support zones or resistance zones. You can look at the fib, which you bring the levels. Then you can also look at liquidity zones. We looked at liquidity zones yesterday. Liquidity. Liquidity is just another translation of the support and resistance, because within the support and resistance zones, that's where we get the liquidity zones. Or you can also look at fair value gaps. Okay, so if you are very familiar with all these four different strategies, all approaches, then trust me, the only thing you need to work on is just your emotions and risk management. That's the only thing I can tell you. Because all these levels, you can use them to trade and become profitable. When I was starting my journey in trading, I was just looking at support and resistance. Then I came and realized there's something to do with consolidations. Then after consolidations and support and resistance, I came and discovered the liquidity zones within the support and resistance zones. Then from there, now I advanced and started to look at the fib, the levels. Then after that, now I also started to look at fair value gaps. All these are approaches that I've tested for years. When I started my Forex trading journey 2020, I started just looking at support and resistance. And I traded support and resistance for more than 3 years. I tried to learn fair value gaps I was not understanding. But later I came and realized it was something very easy to look at. So we grow every day, we learn every day. Every day is a learning day. That's why I don't limit you guys when it comes to my classes. I don't limit you. I will repeat the same concept over and over again because to me it has made a very big difference and it's a very simple approach. No complicated terms, no complicated terminologies or approaches. So just simple and straight to the point. That's why I love technical analysis. So with that said and done, or done and said, see you in the next one. We have a class in the evening. We'll talk about the FIB again. We'll now analyze the market and see how the market has been behaving or behaved within the day. So in the evening, we'll do a recap and see how the market played along. Okay. So see you in the evening. Please remember to share your assignments about the fair value gaps and just identify value gaps and look at if the fair value gaps had any impact. Just draw the fair value gaps. Try using 30 minutes and 15 minutes time frame both. So send me 2 screenshots. You can send me even 4 screenshots. You can do support and resistance. You can draw the fib level. Those are the levels. And you can also do the fair value gaps. Then you send a screenshot. Remember, practice makes perfect. Okay. So see you in the next one. For the other guys, wait for the signals. Let's see how the market behaves. You can see there is some sort of consolidation. So this consolidation might cause a rejection here, might force the market to create a resistance at this level. So we might expect to see the market coming all the way to this big support. You see this big candle here. This now our support. So we might expect the market to come all the way here because of this previous move. But we'll talk about all this in the evening. So please don't miss out of that session. We have a class in the evening at 8 p.m. If I'm late, don't blame me, but I'll make sure we have a class. Okay? For the guys who keep on calling me, following up on the class, thank you so much. Don't feel like you're bothering me. So always let's keep in touch. So see you in the next one, guys. You have a good night for the guys in US. For the other guys in Kenya, see you in the next evening. In the evening. Okay. That's right,